Good morning. My name is Danny Callow. I am the Chief Executive Officer of African Gold Group. And I'm going to talk to you today about our flagship Kobada Project in southwestern Mali. I'll just point you to the disclaimer on the presentation. So we are a TSXV listed gold company with a clear vision to become Africa's next mid-tier producer. We've just delivered a construction-ready definitive feasibility study in a project in southern Mali for 100,000 ounces of gold by Q2 2022. We have an experienced management team and independent board who have a record in financing, construction and operating of mines in Africa. As I mentioned, we're a near-term gold producer with first gold 19 months after construction begins. And what I like about this project is this massive exploration upside that we have that we'll talk about in a few minutes' time. We also believe that we're undervalued to our peers and have significant upside in share price potential for investors and a clear strategy for growing this business through our new restructured board and management team. I point you to a couple of new members of our board, our chairman, Scott Eldridge, with a track record in financing and operating in the junior mining space, and Jan Erik Back, based out of London, also with a track record in raising money for mining projects. The structure, as you can see in the top left here, is 148 million shares outstanding. We've made a significant push to diversify our shareholder base over the last few months, and as a result of a very successful oversubscribed private placement in July, we managed to produce a whole host of new institutional shareholders into our share register. And again, if you look in the bottom left-hand corner of this, you can see that as an EV to total resource comparison, we are significantly undervalued to our peers. We've spent the last 12 months doing a huge amount of restructuring and reorganization and setting us on the right footing for the future. I joined the company in August of 2019. We put together a strategy to deliver a definitive feasibility study by July of this year, which we did. And this encompassed a whole host of additional drilling, infill drilling, which saw an increase of 48% in the size of the reserve base, as well as some metallurgical test work, which fed into the definitive feasibility study. During June of this year, we announced a restructure to the board and closed a very successful private placement in early August of this year. Looking forwards for the next 6 months is a dual focus. We intend to continue to drill this property as we have significant upside, but at the same time, we're continuing to do significant marketing, attending conferences like this and speaking to institutional investors about the main capital raise. The project itself, the DFS was delivered, it's very robust, some very economically attractive numbers. You can see there, post-tax IRR of 41% and NPV of 226 million. And I think what's encouraging for us is that this study was done at a 1530 gold price. So you can see at current gold prices, there is significant upside in the NPV, IRR and cash flows. The study itself was done to a very high engineering standard by an EPCM company called Senet. It's a simple contractor-driven mine, carbon in leach and gravity for the process, all oxides. And this allows us to bring down the operating cost to a very low level of $704 an ounce. Likewise, the all-in sustaining cost number of $782 an ounce is certainly down in the lower quartile of West African producers. And as I mentioned before, we can produce first gold 19 months after construction begins. In addition to that, we are fully licensed and permitted and ready to go. As I mentioned, the next 6 months looking forwards, whilst we're going through the process of the capital raise, we have decided to put drills back in the ground. As I mentioned, we have only drilled 4 kilometers of around 30 kilometers of shear zones that we've identified on the property. And it makes a lot of sense to go back in and start to drill those out. This program will form a 3-phase approach to the exploration program. You can see under the yellow blocks in phase 1, the red area there is our current mineral resource. That is on 4 kilometers of all of the white dotted shear zones that you can see on that map. The 3 yellow blocks are the phases of drilling that we're looking at. These will run concurrently, so not one after the other. And we are currently drilling in phase 1 area and phase 3 area. So phase 1 is looking at a very simple, straightforward process of infill drilling to upgrade around 575,000 ounces of inferred oxides, which are sitting around the current measured and indicated resource at a reasonably good grade of 1.3 grams a ton. And the intention is to pull as many of those through an infill drilling campaign into our current measured and indicated resource and upgrade those into reserves. This, we believe, will take another 6 to 9 months. In addition to that, we have significant strike extension on our northern main shear zone area, and we intend to step out drill there to test the extension of that strike. We believe there are 6 to 8 kilometers based upon our regional exploration, but at the moment we are just starting that off. Some of the intersections that we've already seen to the north of our current resource zone are very encouraging. You can see there 22 meters at 5 grams a ton and 23 meters at 1.6 grams a ton. So we believe that this ore body becomes richer as we move to the north of our property. And then finally, phase 3, which we've also started drilling as well, which is to start to test the very prospective shear zones around our concession. This one sits 5 kilometers to the east of our main shear zone, the Gosso target, and we've already drilled 6 holes in there, and we've already identified around 750 meters of continuous strike on what we believe to be another 4 to 5 kilometers of strike. So very exciting in terms of the resources. On the ESG side, we've decided to go for a hybrid power plant. For us, this is key. We are able to provide around 35 to 40% of the power requirements of our mine through solar and battery energy storage. And this results in significant savings in terms of fuel of around $5 million a year, but more importantly, some huge pollution reductions, and the numbers you can see on the left-hand side of the chart there. In addition to that, we've kicked off a corporate social responsibility plan. Initially, this is commitments in local sourcing of labor and goods and services. This has worked very, very well, and a lot of money is flowing back into the local community through this. And all of this will roll up into a much more detailed discussion around our environmental and social management plan. Our strategy therefore is fairly simple. Early cash flows from construction and operation of the Kobada Project. We will see significant cash flows generated from this, and this will allow us to continue to expand organically through our current concession and look at disciplined M&A across the rest of West Africa. In terms of the financing side, we believe this is a debt equity split of around 65-35. Currently, we're focusing on the senior debt providers. We have a number of these in our data room, and we're going through the process of due diligence. We believe that this is going to take some time. That is why we have drills back in the ground to continue to deliver good results while we're going through the financing process. And then just to wrap this up, we're a near-term gold producer. We can produce gold 19 months after construction begins. It really is a compelling definitive feasibility study that's been delivered with some very, very good numbers. We're definitely undervalued to our peers in this marketplace as a ready-to-go constructor. We have a very experienced management team in operating, constructing, and raising finance for these operations. Massive exploration upside that I've spoken about. We really are just touching the tip of the iceberg and currently sitting on 2.3 million ounces. And we have a clear strategy for growing this business, not only at Kobada, but also into a multi-asset, multi-country company. So with that, I'd like to thank you very much. And you can see the details on the screen there. We're happy to take any emails or answer any questions. Thank you.